Welcome back to another weekly analysis video. This analysis is for the week of January 18th, 2026. We'll start off with a weekly review of last week's price action and then move into the analysis, like always. So last week, we had a nice, more or less, well, it was a consolidation week for last week. In the beginning of the week, we actually traded down, rejected in here, and started trading higher. I wanted to see these highs taken out. Didn't quite get there. Came back down all the way into 25,515. And we've closed more or less above its relative stop run area here. So it'll be interesting to see what happens going into next week and how we open. But this week was a consolidation week, and as I said in the last review in the weekly analysis, is that I pretty much have a neutral bias, and I'll be leaning one way or another a little bit, but I'm not going to put all my eggs in one basket onto one side of the market. Not right now, anyway. So we still have a neutral bias going into next week, like we have these past 3 or 4 weeks. Going to the end of the year, and in the beginning of the year, it can get a little sloppy like it is now, and you see that. So with that being said, let's go ahead and move on into the hourly chart. Alright, on to our hourly chart now. Let's go ahead and jump right into what I want to talk about, which is I had stated that I wanted to see price from its open. We opened in here, immediately had a decline down. Preferably it stays in this area and rallies. That's what I had stated last week. It didn't do that. It went right through that area. And I had mentioned that if we start seeing it go below 25,758, that it would either need to get away from it quickly, notice how it got away from it, or if it was going to trade below it and continue trading lower, we would have to see signatures that support it being used as inversion. We didn't see that. Came right down into here, which is the stop run area of the 25,515 level. Rejected in here, rallied higher. Okay, sweeping 26,001. Ideally, it would have rated these highs and kept pressing higher, but it did not do that. Instead, this, as I stated in the review and analysis for last week, that we would have to monitor what happens at 26,001, and it did repel away from it back into 25,515, and now we're here back at the stop run area above 25,515. And if we look at this overall price structure here from low to high, we're basically in the middle. So now we need to wait for more information. So we need to wait to see how we open going into next week to determine really our bias, because it could repel away from the stop run area, or it could use this level as inversion and go lower. So I need to wait for more information and see exactly what the market wants to do. So with that being said, let's go ahead and move on into the 15-minute chart. Alright, on to our 15-minute chart here. We have a more refined view. Let's go ahead and briefly discuss the day trading opportunities that occurred during this week. Even though it was a sloppy week, there are still opportunities. Every single day, there is an opportunity to do something. Doesn't mean you have to do something, but for the most part, every single day, even in sloppy conditions like this, there are still opportunities. So let's go ahead and first briefly discuss this one here, and then we'll discuss the breakdown in here, down in there. So when we initially came down here, I was monitoring how we were going to behave in here and here. This is the maximum that I'd want to see price come down to if it is to come to this area in here. This is the middle of this range here. Okay, that would be the maximum, and it's also the stop run area above the 25,515 level. We came into that area, came through this area in here, but notice how it stopped in here initially. So I was waiting to see what kind of reaction we get at 9:30, and we had a pop up. So we had some expansion candles coming through the 25,758 level. And what you're looking for in the lower time frames is an entry technique. So you dial in on a 1 minute chart in here, and there would be an entry in there for you. And you can dial in on smaller time frames as well. So anything below a 1 minute chart, so 45 second, 30 second, 15 second chart, you can dial in on that, because this is moving into new territory, into here. And that's what we did. Eventually we climbed up to 26,001, and then later on we did end up rejecting in here. Now, how do you know when we're going to go the other direction and start rejecting in here? Notice how it banged around this area in here. You see how it broke away from here with this candle at 5:15 on Wednesday, right in here. This is what ICT would call the breakaway gap. So it's breaking away, in this case from the middle of this range, comes back into that breakaway gap, and again, this is something that I'm going to discuss further going into the later parts of the year. So I'm going to be discussing more concepts starting in February, late February of 2026 this year. So look forward to that, and breaking down the concepts that ICT created around what actually goes on in the market, okay? Because his concepts are only a language that work around what goes on. Comes back into this and moves lower into 25,515. Your first objective would have been in here, because this is the stop run area above that. So you're always gauging to see how price reacts at certain areas, because there's going to be speed bumps or obstacles in the middle of the road that price has to go through. Sweeps 25,515 into the stop run area below 25,515, comes off of that. So we have one nice swing here and another swing earlier in the week. So those were the two main trades that I focused on. Anyhow, to recap, it was a very sloppy week. And because it was a sloppy week, you have to be very nimble in these conditions. Otherwise, you get chopped up real quick. So with that being said, let's go ahead and move on into the weekly analysis for the week of January 18th, 2026. Alright, now we're back on our daily chart here for the weekly analysis for the upcoming week of January 18th, 2026. So look how sloppy it is in here. I need to wait for more information before I actually have a firm bias as to what I believe price will do next. Because from this point, it could go both ways. We're below this range in here, and we're above the 25,515 level, and above its relative stop run area, which is above that particular level. Okay? I need to wait for more information to get a firm bias, whether it's slightly bullish or slightly bearish, or fully bullish or fully bearish. I am completely neutral at this point in time as of 10:47 a.m. on January 18th. I need to wait for more information, and until I get that information I need, I'm going to remain neutral. So what information would that require? Well, I need to see how price behaves around this current area it's at, and if it trades through here, 25,758, how it trades to there, and if it goes through it, or if we break down below the stop run area and start going to here, 25,515. This is probably the hardest part in trading, is waiting, because it's you believe it's counterproductive You think you always have to be in the marketplace doing something, when waiting is a position. I learned that very late in my career. You don't always have to be doing something. And ICT emphasized this quite a lot in his teachings. So it's something that I have personally taken to heart. And at this point in time, I'm waiting for more information. Because there's no clear direction in here. It's very sloppy. So with that being said, let's go ahead and move on into the hourly chart. Alright, here we are on our hourly chart now. This is the open from last week, Sunday, January 11th, 1800. So as you can see, again, as we previously discussed, price came all the way back down into here last week to the stop run area below 25,515. We rallied through it, came back into the equilibrium price range of this particular price range between 26,001, 25,758. We're currently below that right now. Okay? We're also above the stop run area relative to the 25,515 level. So this is my concern, is we're basically in the middle here of this whole consolidation, and in the middle of this in here. Okay? I need to see how price behaves in this area. Now, given that it's heavy and it left this area like that, leaving it open, there may be a slight bearish tendency for it to want to gravitate lower. Okay? If this remains open, if we start coming back into that here, trading through this gap, it will want to trade higher. Now, as far as which level should hold up, this is the higher time frame, higher priority level. This should hold up and override, so to speak, this level here, this range here, okay? If that makes sense. There's a priority, there's an overriding mechanism as to how these algorithmic levels work. Okay, that's what should happen. But I need to wait for more information and see how we open and how we trade in the beginning of the week. That'll determine more of what we should see later in the week. Okay? And again, even if we are to stay in a consolidation and sloppy, there are always opportunities to day trade. Doesn't mean you trade every day. It just means that during the week there will be opportunities to take advantage of, and there will be opportunities to make money off of. So with that being said, let's go ahead and move on into the 15-minute chart and wrap up. Alright, onto our 15-minute chart here, where we see a more refined view. Let's go ahead and draw your attention into this area in here. How we consolidated above this level going into the close on Friday. Okay? It has spent a lot of time just above this level, which I don't like, because even though we're going into the end of the week on Friday, I never like it when price sits above particular levels. If it's going to get away from an area or a level, ideally it does it quickly and with velocity. Okay, so it comes in here and then moves quickly away in the opposite direction. It sat here a little too long for my liking. So it looks heavy in here. So you can add, along with my main neutral bias, perhaps a slight bearish bias as of right now. Even though it looks heavy, the 25,515 level would override this. But because we've left this range, breakaway gap, it breaks away, hence the name breakaway gap, as ICT would refer to it as. It broke away from this area in here. I just don't like how it sat right there. So Again, it all boils down to waiting for more information and seeing how the market opens and how we trade in the beginning of the week, which will determine what we will do for the remainder of the week. So that's what I'm waiting for. So with that being said, that's going to conclude the weekly analysis for the week of January 18th, 2026. As always, take care and God bless.